Hey everybody, Brian Hoops here with Midwest Market Solutions. This is our Market Insider TV closing commentary. It's Thursday, October the 11th. Our closing commentary here is also going to serve as our monthly webinar as we look at the supply and demand report from today. Corn, soybeans found some strength following the report's release, and kind of a bullish surprise for corn. The wheat futures ended lower. Soybeans really did not have much of a bullish report either, but enough to give us a little bit of short covering. And let's take a look at the report. If you ever have any questions, talk about marketing strategies or marketing ideas, just reach out to any of our offices. I know they'd be glad to assist you coming up with implementing some of these strategies we're going to talk about tonight, or coming up with some strategies of your own. Just reach out to any of our offices. You can find them at our website, midwestmarketsolutions.com. Numbers are there, and I know somebody would be glad to assist you. Let's look at the numbers here from the supply and demand report. Let's look at production. Corn yields 180.7 bushels per acre. Now that is down a bushel from the average trade guess, and that was a bullish surprise to the trade. The old adage was big crops get bigger. Trade expected that this crop would be no different, and we would see an increase in yield, as the guess was 181.7, almost a half a bushel more than last month, and we came in at 0.6 of a bushel less than a month ago. Now compare it to last year, which was 176.6. That is a little bit of still a bigger number. In fact, this is the largest yield in history, but the production number will be the second largest in history. So a big crop here for corn, whether it's 180.7, 181.7, it's still a monster yield and a big crop. But there is some positives coming out of this corn, like I said, and we'll look at that here in a second. Soybean production 53.1, that is up from last month, but not quite as much as the trade had expected. Average yield 4.722 billion bushels, and production came in at 4.690. Now, there's a difference there in the production numbers, and the way the USDA accounted for that was because they lowered harvested acres by 600,000 for U.S. soybean acres. No change in the corn acres, less soybean harvested acres, and that's why we're seeing less production here, and that is bullish for the soybean market. So the USDA may be taking into account already some acreage being lost to the heavy rains, some snow that has fallen. Right, let's look at ending stocks, because that's the bottom line. This is how these yields get turned into with our supply and our demand equations. This is what the bottom line is, our ending stocks, and that tells us how much carryover we have. More ending stocks you have, the more bearish prices are. Less ending stocks, more bullish prices are. Corn at 1.813 billion, certainly well below what the average trade guess was, and that was worth 6 cents today on the board as the market rallied. Last year, we had stocks at 2.140, so we are well down from last year, over 300 million less than a year ago. Very positive for the corn market. Last month, we were a little bit larger, and we'll talk more about that here in a second. But this is not as burdensome as it could be, and I think we will see this number for corn reduced in future reports. Soybeans, 885 million bushels, just slightly below the average trade guess. 845 million was the last month, so we did increase from last month, no surprise there. But last year, look at this, we're more than double where we were last year. Why are bean prices in the $8 range on the board? Well, because of this ending stocks number, and we should be thankful we're not even lower than that. Wheat stocks, 956 million, right in line with the average trade guess. Not much for bulls to get excited about in this report. For wheat, it is up 20 million from last month. Now, on a worldwide basis, corn ending stocks nearly right on the number of average trade guess. Same thing for soybeans, 110 million metric tons. Wheat did find a little support early from world stocks being less than the average trade guess, also less than last month, while corn and soybeans increased from last month. You look at a year ago, the direction of corn stocks well down from last year. Soybean stocks are up a fairly significant amount, and wheat stocks are down compared to a year ago. So some positive trends there. Let's look at a little bit more in-depth look at the corn, soybeans, and wheat market. For corn, we talked about the production number. Beginning stocks increase. This is because of our quarterly stocks report. Trade found more stocks on hand in the September report. Remember, that gave us a real push lower, a bearish outside reversal, but we've come well off of that. We look at our total supply, a little bit of an increase because of this, but our production is down. And here's a key number, I think. Exports, 2.475 billion bushels. That's up 75 million. Look at last year, 2.438. USDA had to come up as far as exports because our inspections, how many bushels are being inspected for on ships to load out and be shipped out, we're sitting 65% above last year. We need to increase this in future reports, maybe a 2.65 billion bushels. That's going to cut a couple more 100 million bushels of any stocks off of this number. Just on exports alone, we're looking at 1.5 to 1.6 billion bushels of carryout. This is not a game changer, not a super bullish number, but we're going to see higher prices through the winter months as USDA factors in these stronger export numbers. So I'm not in a hurry to sell new crop corn, old crop corn. I'm not in a big hurry to sell that. But as we talk about more about this going forward, it's something to definitely keep an eye on and watch as these ending stocks numbers start to be decreased. Soybeans, it's the opposite. Look at our exports first of all, 2.060. No reason to really change that. That's a little bit less than last year, but with China being out of the market, the longer they're out, the less chance this has to increase. We don't expect there's going to be any agreement being reached with China until late November. In fact, it's been rumored for quite some time they would not come to the table until after the midterm elections in November. Wall Street Journal article today talked about President Trump and Chinese officials meeting in late November at a summit, and we may reach some sort of agreement at that time, but it certainly is at least a month away. Carryover number a little bit larger because of quarterly stocks. Production figures virtually unchanged from the September report, but our ending stocks up 40 million. You just simple math there with no change in exports. We don't see any change in exports or crushings going forward here in the next several weeks. This ending stocks number going to remain burdensome for some time for the soybean market. And in wheat, not much changes here. Slight increase in yield, very small production increase. Carry in beginning stocks, very small decrease. Very boring report. Exports were down. Our total usage, was down 10 million bushels and 956 million bushels of stocks. It is down from last year. But again, nothing to get too excited about. In this wheat market, we have burdensome supplies of wheat and soybeans, and we don't expect that they're going to change anytime soon. What can we take away from today's report? Corn usage, it continues to exceed demand. What's the job of this market? To get to a situation where we're not outstripping our usage or our total production figures in here. So we've got to get to a point where we're producing more crop than what we can use, and we've got to increase our yield potential to do that, or increased acres, or slow down demand. And you do that by moving prices higher. And I think that's the direction corn is headed. Corn exports will continue to improve. That will narrow the balance sheets, and that is friendly. We've talked about that. We do expect balance sheets to get tighter over the next several months. Yield losses in the Dakotas and the Western Corn Belt, they're going to show up in future reports. There is production numbers in the November report. There will be nothing in December. Then you have the final yield numbers that come out in January. This should limit the downside risk. There is heavy snow, and it should melt over the next several weeks and allow producers to get back in the field. But if crops have been flooded or underwater, they're not able to be combined and moved into the food chain. USDA is starting to account for some of that, but yield numbers probably will start to come down as well. No Chinese agreement until after the November midterms. Not a major surprise there. We've talked about this already. Once we do expect to see prices get a good rebound as Chinese demand will hit the market, and we don't know when that will happen. That could happen down the road through the winter months or into the spring time frame. Big carry in soybeans and wheat. That suggests storing the crop. If you look at the price differential between July soybeans and November beans, for example, there's about a 50-cent carry. Now, that tells you to store the crop. However, don't get caught storing without hedging. If you're going to store the crop, go ahead and make some sales at higher price levels. Make sure you lock in that carry and use some low risk option strategies to play the Chinese market here. Don't get caught just owning your crop and hoping we get an agreement worked out, and there's no guarantee that we will. No reason here for large specs to cover short positions in wheat or soybeans based off of this report. If we start hearing yield losses, significant yield losses, that would be enough to get the funds out of their short positions. But there's a lot of talk that yields are going to increase, and if they do, we don't have a strong export market. We could see demand start to weaken. Maybe those carry numbers go from 885 million bushels closer to 1 billion bushel carryover for the soybean market. We sure don't want to see that. Market will encourage more corn acres in 2019 and less soybean acres. My opinion is we need to increase our production numbers so that we don't exceed demand, and we do that by raising prices, and we attract more corn acres to be planted. We don't want as many soybean acres as we already have a burdensome supply. So I do think going through the winter months and into March and April, we'll see a push on the new crop corn and encouraging acres to be seeded instead of soybeans, and we'll see less soybean acres. So I'm not in any hurry to sell new crop December corn at this time. All right, that's our webinar for today. We hope this helps you out. We looked at the markets. Reach out to any of our offices. I know they'd be glad to assist you. Have a great night. Thanks for watching. Brian Hoops, Midwest Market.